Hey guys, what's going on? It's Billy here from the best place to buy gold online. I hope you're having a fantastic day. So in today's video, I just want to talk to you about the gold-silver ratio, what it means, and why does it matter. So if you haven't done so already, go check out my website, goldfinancial.de. Go ahead and check it out if you wish. You can register yourself for a free account. And obviously, it's our aim to offer you the cheapest fine gold on the market at the prices to suit every single pocket. So if you want to start acquiring physical gold, go ahead and check out that website. I highly recommend you go over there and look it out. So, gold silver ratio, what does it mean and why does it matter? So, for experienced investors, the gold to silver ratio is one of the many indicators used to determine the right and wrong time to buy and sell precious metals. Other factors include economic uncertainty, inflation frenzy, and debt, have encouraged obviously millions to invest in gold and silver, and in the past few years, small scale investors have begun to climb aboard. And most recently, billionaires and lots of billion-dollar hedge funds are also accumulating these large amounts of metals, particularly gold, and also obviously the central banks obviously acquiring huge amounts of it as well. So obviously, despite obviously these market developments, too many, the gold to silver ratio remains a vague, elusive mystery. So what is obviously the gold silver ratio, and what does it matter? So firstly, obviously, it's a really, really good question. And first of all, I just want to explain a simple definition of what it is. So basically, the gold to silver ratio is the amount of silver it takes to purchase 1 ounce of gold. So today, 22nd of May 2016, the gold to silver ratio is around about 76 to 1. So that means basically you can buy 76 ounces of silver will buy you 1 ounce of gold. And as you can see there's a chart that was taken off of, I believe it was kitco.com. I can't remember. It was one of the ones anyway. I just typed it in on Google and these charts came up. So obviously you can calculate obviously your own gold to silver ratio. It's very, very simple. And obviously, although like I just said, there's plenty of websites out there that obviously currently do this, it is relatively painless to calculate your own. So all you need to do is simply take the gold price divided by the price of silver, and voila, you have the gold to silver ratio. So here's an example. Right now, gold price is fluctuating around about £863 and 22 pence. And you divide that by £11 and 39 pence, which is the silver spot price, and approximately you have 75.7 gold to silver ratio. So you're probably thinking, well, thanks for the information. What does it really mean? So investors who trade in gold bullion, silver bullion, and other precious metals scrutinise the gold to silver ratio as a signal for the right time to buy or sell a particular metal. When the ratio is high, the general consensus is that silver is favoured. That is because relative to the ratio, silver is somewhat cheap. Conversely, a low ratio tends to favour gold and may be a signal it's a good time to buy the yellow metal. Many large-scale, experienced investors may trade their silver for gold as the ratio drops. And I'll get into that at the end of this video and my thoughts on why you shouldn't do that. Unfortunately, because the gold to silver ratio obviously fluctuates so widely, it can be difficult for novice or small scale investors to read the signals and make a profit. Typically, the gold to silver ratio serves as an impetus for diversifying holdings. So experienced investors agree that diversity is good. If one investment flops, alternative investments in your portfolio pick up the slack. So for instance, like if you invested in stocks, bonds, precious metals, and maybe real estate, you could have all those investments working for you. You've got small percentages in each one of them, and at any time half of them come down, the others are outperforming the rest. So it's kind of a well balanced. You never ever obviously want to put all your eggs in one basket. Historically, the gold to silver, what did the gold to silver ratio look like? And obviously since 1687, as far as back as the records reach, the gold to silver ratio facilitated between roughly 14 and 100. Around 1900, the ratio steadied and then it just remained relatively flat. Obviously, prior to 1900, obviously the gold ratio hovered around 16. This was likely because many countries were using gold and silver backed currency. So, for instance, France and the United States, among others, assigned statutory limits on what the gold ratio could be. So, sorry, on what the ratio could be, because so you basically your coins and stuff. I know in this country it was before pre 1947 had 50%. So 1947 up until I believe it was 1970, around that age. They had obviously 50% of silver in our coinage, and obviously prior to that it was 90% silver in our coinage. So obviously we had a silver, and obviously we had also our paper currencies that we were using backed by gold, which was stored in the central banks. So obviously the US Geological Survey estimates that obviously 17.5 times more silver is in the Earth's crust than gold, which could provide another explanation for the pre-1900 gold-to-silver ratio. Obviously, throughout the 20th century, though, the gold-to-silver ratio has averaged around about 47 to 50 and has fluctuated wildly at times, and it's currently obviously very, very high, around about 76 to 1. Obviously, so what does this mean in the future? Some experts predict that gold-to-silver ratio will return to its long-term pre-19 average of 16 to 1. Many factors are cited in this favourable claim. It's worth noting, however, among these experts are some of the most ardent advocates for silver investing. In the end, in order for the ratio to return to its pre-19 average, the silver price would need to rise approximately to $105 per ounce. Likewise, if the ratio were to drop to its long-term average, silver prices would rise to $61 per ounce. But if you're talking $100 per ounce in silver, and you're talking a 16 to 1 ratio, you're talking at least $16,000 gold price. So if you have gold, it's going to increase more in value. So obviously, just one final note, disclaimer. Obviously, this information is not intended to be considered as investment advice. So do your own research and evaluate your individual situation before making investment decisions. I just want to express that. It's just my opinions that I'm expressing here. But my advice is to invest in the two and treat them separate investments if that is what you wish to do. It's my view that silver and gold mix a bit like water and oil, not very well at all. So what I mean is, if you're in silver, then don't keep buying silver with the view to buy gold one day. However, with that said, I do love the silver metal, and it has far more uses than gold does. This is what makes it that's what I believe it makes it an attractive investment. But it comes with a price. It's highly volatile, and some coins and bars carry capital gains tax, or CGT. So plus, you also in the UK, it comes with VAT. So you have to do a lot of due diligence when investing in silver to get the best price you can for your fiat currencies. A lot of people sit there and say, "Oh, well, what does that matter? Does that really matter?" At the end of the day, fiat currencies are losing value, but at the moment they still hold that value because people still believe their value. So, isn't it worth trying to do your due diligence and to get the best that your paper currency can buy before obviously investing in silver and gold alike? I highly think it's definitely best to look at the best prices out there, because if I go, for example, I used Royal Mint the other day. Royal Mint, they're selling currently a gram of gold for 50 pounds, UK pounds. Legacy Gold are selling it for £30. That's a £20 saving. That can almost buy you another gram of gold. So that's my point, when you need to do your due diligence and shop around and get the right price for your fiat currencies. And rightly so, in my opinion. I don't see silver as money like gold is, and I see huge potential in it due to obviously the tech industry and the renewable energy industries obviously growing rapidly. So if you are buying silver with the view to buy more gold, then know that the cost of entry into one metal, silver, and the cost of exiting out of the metal, then the cost of buying into another metal, gold, will be significantly higher, especially because if and when the price of silver has doubled, then my goodness, gold will be so much more to buy into to make the silver profit look insignificant. It will make it look insignificant by comparison. So there you have it. I hope you got value. If you did, feel free to like, comment, share. And if you want to start acquiring small amounts of gold like I have, highly recommend you check out Legacy Gold. Go ahead and check out my website, goldfinancial.de. The link is in the description below. Sorry I've rambled on a bit. It's quite a long video, but I hope you got value, and I'll see you on the next video. Take care. Goodbye.